Morning guys, Joel Frank here, market analyst for YouTrading, and today we're going to take another look, another check-in on gold. Now, we've been through these technicals before, but just to quickly recap, we've got gold here. These are one-day candles, and as you can see, gold for a long period of time, from about August until, well, literally only like a couple of weeks ago, gold was gradually heading to the south within the confines of, you can see this long-term sort of descending trend channel. And that was obviously after gold hit those all-time high levels back last August, and then we hit lows. When were the lows? They were in sort of February and March. This year, we hit this year's lows around 1670. But since then, we have rebounded very, very strongly. As you can see, they put in this double bottom, gold did in the 1670s, and we've rallied, well, more than $200, that's an impressive rally. That's like that's like a 15% rally for gold. And the crucial thing here for me is, if we zoom in a little bit, the fact that we've broken above this descending trend channel. It's this break here that is the crucial moment for me. As well as, perhaps you could argue, you can't see it super well, but you can see this blue line here, that's the 200 DMA. We also broke above that as we broke above that descending trend channel. So the fact that we're above this long-term descending trend channel, the fact that all the technicals are looking pretty good at the moment, 21 DMA back above the 200 DMA, 50 DMA heading higher. I would say we're no longer in a bearish technical trend. Perhaps now, difficult to say we're going to be heading back to these all-time high levels, which, just for reference, are around here, which is in the upper 2000s. But at least we're probably going to be in more of a sideways consolidation. Now, let's zoom in a little bit and let's look at the levels of resistance that are the key ones to look out for. This area here that I've already got marked up. Okay, that is the January, that is actually this year's high, set in January, and last November's high. So the Q4 2020 high. This area is sort of around the 1950 to 1960 mark. So that is the key area of resistance to look out for if we do continue to grind higher. To the downside, we've got a bit of a sort of hodgepodge of levels of support. I mean, the first one, I think, is this one that I've got marked up here. What's this? This is the 1875, roughly. And then just below that, you got the 21 DMA, which is currently at 1860, but in the next couple of days, that will continue to move higher. And then you've got the 200 DMA, you've got this previous high in May before we had that big push, this previous high back in early February. We got a hodgepodge of levels here that you can take a look at, and obviously that descending, the upper bounds of that descending trend channel as well. So really, from 1880 all the way down to about 1840, there's quite a mix of support levels for gold to derive some traction from if it does dip back there. So yeah, this is pretty much the range that I'm looking at, guys. Could we go higher and test this area, or are we going to see some retracement towards this area? And then it's difficult to say. Obviously, you never know what's going to happen, but I would be inclined to potentially play the range in these levels. But obviously, it's always worth monitoring what's happening with the technicals. Okay, so for example, if the dollar really starts selling off, well then, instead of playing the range, and the fundamental picture is looking really bearish for the dollar, then potentially we could see this level go and then a push back to all-time highs. So obviously you have to monitor the fundamentals. Speaking of the fundamentals, since I last spoke about gold, not really much to update on. Although this is a big week for gold. So what's been driving gold higher in recent weeks? Well, there's been heightened concerns about inflation in the US, and that's kind of exacerbated by the fact that whilst there is heightened concerns about inflation because the inflation data is heating up, the Fed seems keen to maintain its ultra dovish stance. Now, that's been the case over the last couple of weeks, and that doesn't look like it's going to change anytime soon. So that is supportive for gold, okay? People are worried that the Fed is going to allow the economy to run too hot, and they're looking for a hedge against inflation, and gold is kind of the perfect hedge against inflation, really. Well, that's what it's kind of seen as. In terms of this week, we do have crucial jobs data on Friday. As I'm sure most of you guys will remember, was it April's jobs data was pretty bad, okay? And people are looking for a bit of a recovery potentially this month. Although, yeah, it's difficult to say what's going to happen, because obviously a lot of the problems that potentially plagued the labour market last month, such as the potentially excessive unemployment benefits, they're still at play this month. So potentially could be another weak number. If it is another weak number, well then that really should be good for gold, right? Because that would sort of reinforce the Fed's dovish stance. So again, if it is really, really strong, then perhaps some traders might be bringing forward their expectations for Fed tightening, which I guess could be a little bit gold negative. But the thing is, when it comes down to it, even if it is, imagine it's a really, really big number, like 1 or 2 million in terms of jobs added to the US economy, which would be way more than expected. There's still like 8 million people unemployed in the US right now. So one good month isn't going to get the Fed drastically changing their monetary policy stance, or drastically changing their monetary policy guidance. So the underlying picture of support for gold, in my mind, is likely to remain going forward. But yeah, anyway, a little bit longer this video than usual, but I hope that's helpful, and I'll see you guys in the next one.